The Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
Okay. 1490 WGCH. This is Carrie Lutz. You're listening to the Financial Survival Network. Back with me again is the one, the only mercenary geologist, Mickey Fulp. Mickey, welcome back to the Financial Survival Network.
Thanks a lot, Carrie. Good to be back.
It's great to have you back, especially this early in the year, because we want to get your point of view as far as the outlook for metals, commodities, energy. What are your thoughts there?
Well, there's no secret, Carrie, that I am a secular bull on commodities. And we've talked about that before, basically driven by Chinese and Indian demand, with great portions of the population wanting to become middle class. So within that regard, in the shorter term, let's say in 2012, I am still bullish on commodities. I think that, as with all bull markets, we will have our ups and downs, and we certainly saw that not only in energy in 2011, but the metals were up and down, and some of them went parabolic, and even the agricultural minerals were up and down over the course of the year.
We're in a secular bull market. You don't see anything on the horizon that's really going to interfere with it, but we're going to have gyrations back and forth, because that's the way bull markets, as bear markets, work. You got short-term, intermediate, long-term trends, right?
Absolutely. So in 2011, we saw the silver market go parabolic in May. We saw the gold market go parabolic from July through October. I should probably back up and say silver was a 3-month process of parabolic rise and fall. We saw gold do a 4-month parabolic rise and fall. We saw very strong markets for the most part in the first 7 or 8 months of the year, and then we had a significant correction in all commodities, or let's say energy and metal commodities, in the market correction in late September and early October. During that period of time, all metals across the board lost 30% of their value.
Yeah, amazing that what goes up often comes down, although perhaps not as much as where it started from. And do you attribute it to just pure market technical factors, or you think that the shadowy hand of government was involved in this?
Well, I am not a conspiracy theorist, but I will tell you that I firmly support the idea that all markets are manipulated, perhaps not always by government, but maybe banksters, maybe people that have a vested interest in commodities going up or down. The commodities markets as a whole are the most speculative markets that we deal with worldwide. The futures markets in metals, especially silver and also copper, are primed for manipulation. So what we need to do as speculators is learn to function within the system that we have been given or have been saddled with.
Yeah, saddled sounds more like it. I mean, maybe strangled with for some people, right? So how do you do that? I mean, I'm not, I kind of know what I'm doing. I know how to place an order. I think I could buy and sell fairly efficiently. But when I'm up against the algorithm factory on Wall Street, what do I do?
Well, there's no way you can beat the computers that trade in a nanosecond, and now you have companies trying to locate closer and closer to the New York Stock Exchange so they can beat the competitors by a nanosecond. Something on the order of 80% of the equities on the New York Stock Exchange are program trading. So we absolutely do not try to compete with that. What I try to do is, and I don't play the commodities futures, or lo and behold, absolutely never the options market in commodities. But what I do is I play the junior resource market, and I do that by evaluating speculative exploration companies for three fundamental criteria: the right share structure, the right people, and the right project. And I am also looking for companies at any given time that are undervalued with respect to their peers. So if you pick the right stocks and you follow an investing philosophy where you take all your money off the table, when they double, you sell half, you're playing with somebody else's money, you're playing with house money, perhaps I'm even playing with your money at times. It is an infallible way to make money in a bull or a bear market, because every junior resource stock in any given 52-week period will have a double from its high to its low. So we apply a very conservative trading philosophy to a very high-risk, speculative gambling market, if you will.
Yeah, and you bring up a great point, which I've made money in the market before, but only because I got out because I knew I had to get out. But when I was playing the juniors earlier in the year, I went by that, but some of them had gone up so fast. They were quadruples, 8s, and 12s, which I'd never had, and I sold them. I sold half off immediately, locked in the profit, and still had a substantial ride going in the position. And then when the market really looked like it was going to take a slam, I liquidated, not quite as early as I should have, but I achieved returns better than I had ever achieved in any stock, in any investment in my entire life. And I've been doing this for, probably almost as long as you, in the 30-plus year range. And it taught me something that, hey, you might have the best stock in the world. It might be headed for the moon, but it's just like those guys in Casino when they decide to knock off Alan King because they say, well, he'll never talk. And the mob bosses around the table, and one of them says, yeah, but you never know. And that's why you sell half, because you never know what's going to happen in the future. The future is uncertain. As Mark Twain said, truth is stranger than fiction because fiction's limited by the human imagination, and truth isn't. And that's what I've seen in these markets. There's no limits to what can go wrong, what can happen to wipe you out in a nanosecond.
That's exactly right. Mark Twain also said, a mine is a hole in the ground with a liar standing beside it. So, and that was apropos in 1865 when he was in the Comstock Lode, and it certainly is apropos, 147 years later. So, you obviously did well this year. It was not a particularly good market for the junior resource sector year over year. I imagine you were one of those guys like me who did some significant tax loss selling at the end of the year to rid yourself of a couple of bad, or at least in my case, a couple of malinvestments. And we saw massive tax loss selling, a brutal tax loss selling season in 2011 in November and December, exacerbated by the fact that we as Americans can carry tax losses forward, but we can't carry them back, whereas the Canadians can carry them back 3 years. So with record markets in 2009, 2010, record returns, there was lots of tax loss selling. But what have we seen since the first of the year? We are now in the fifth trading day of the year. Is that correct?
I think that's about right.
I think that's about right. We see the juniors rebounding. What goes down must come up and vice versa. So we're having a rebound in the juniors. I look very much forward to a positive Q1 in the junior resource market.
So, and I want to go back to a couple of things you said. Now, number one, that old Mark Twain thing, I actually remember that. A mine's a hole in the ground with a liar standing next to it. So how do you pull out the liars? I mean, obviously you look at their track record, but sometimes they don't have a track record, and sometimes things really just take off.
Well, I generally don't play people that don't have a track record in this business. Now, I've been in this business as a practicing economic geologist for better than 35 years now. So I know lots of people, and that's the advantage I have. I understand geology, but what I do is I travel to all these investment conferences, and I will speak at 15 or so events this year. And I go to these conferences and I meet with the CEOs, and I go to the booths and I look these guys straight in the eye. And as a poker player who made his living in high school at the poker table, I have a poker face, and I look people in the eye and I ask them very tough questions, and I see how they react. So that in conjunction with looking at their track records in the junior resource sector, and lots of them have track records, but there are not that many that have many successes. This business generates about 1 in 20 ultimate successes, so 95% of these companies eventually fail. What you want to do as a speculator is get in early, and I am a contrarian, and I tried to lead my subscribers into early on plays that are unknown and have very strong potentials to get that double quickly. Our business model is a double in 12 months or less. Well, that's kind of a no-brainer because all these companies double in 12 months. We've already established that. So the key is to buy at low volumes and low prices when these companies are unknown or unloved or have had some setback that is not a fatal flaw. Buy them then and sell them when they become popular.
And that's called being right at the right time, and there's nothing worse than being right at the wrong time. That can be fatal. And so now we're looking at the coming year. What about energy and commodities, the ags? What's your thoughts there?
Well, I'm very bullish on commodities for 2012. I think the oil business is going to do quite well this year. We've been bouncing around for better than a half a year now, with an oil price of $85 to $105, with a couple of perturbations outside that range. I look for oil to continue to be strong. I look for the natural gas market, and pardon my language here, but will continue to suck. The metallurgical coal business looks very boisterous to me, and I've been making the rounds since for a month after Fukushima, giving a talk called Why I Remain a Uranium Bull. So uranium is the only answer to the world's energy problems, and so that may be a long-term play, but I am in it and I'm sticking with it.
Yeah, it's interesting. You say that natural gas, basically using an old geological term, sucks, and yet I've done better in some of those MLPs than I've done in any stocks long term, and some of my core holdings is in them because I bought them after the crash. They became dump stocks by the hedge funds because the hedge funds were super leveraged because they're getting such high returns and their cost of money was so low, Then they had the margin calls. They had to dump these stocks. They went down 85%. They were yielding, some of them 10 to 15%. They've increased their distributions. They have to pay out their money. They can't hold on to it unless they reform and come in as a regular corporation. And they kind of messed them up in Canada, the Canroys. But these stocks are phenomenal performers, and I don't know what their hedge strategy is, but they just seem to keep charging on, and the pipelines are looking good. Those pipelines, the midstreams, it seems to me there's a lot of upside in the energies, especially if we get a moderate kick up due to the dollar decreasing in value or demand picking up, because even in the Depression, energy demand went up around the world. So.
Well, you had the advantage of being a contrarian, and you moved into these MLPs at the right time. I didn't do that, so I'm looking at a gas price, a Henry Hub gas price of $3 right now, and that doesn't attract anybody to drill or develop wells. There are lots of shale gas wells that are shut in right now because of lack of infrastructure. By the same token, when you were doing your thing with the MLPs, I was moving willy-nilly into gold stocks and uranium stocks, and I am still making a living on those things that I bought in December of '08 and January of '09. So our job as speculators and my job as an analyst is to look at the next things on the horizon that I like before other people get into them. I'm moving into some shale oil plays in the Bakken of Montana, and in a place where outside of the mainstream, which hasn't really been tested to any great degree now. So that's our job, is to find things that are unloved and unfavored and get in then.
Yeah, and I like the idea, and I'm hoping that the metal stocks start doing it in the not-too-distant future, but I like to get paid to wait. I mean, yes, dividends are nice. Utilities took off last year, too, which was kind of a surprise to a lot of people. But, if you can get into a contrarian play like a natural gas situation or a pipeline, and you get a nice, well above market distribution, like MLPs, man, they're mostly tax-free, and you don't have to worry about taxes for the most part till you sell them. Then it gets tricky. But point being that when you could get paid to wait on a natural resource stock, and you can reinvest what you're getting, keep buying more of it, then some real interesting compounding takes place. And I'm hoping, and I don't know what your thought is as far as gold miners and the miners in general paying out dividends. At the very least, it would help reduce the short interest in the stock, wouldn't it?
Absolutely, and that's probably the biggest complaint we have in this business, is that even the large gold miners pay a paltry dividend, and it needs to change, and people are starting to crow about it, and some of the companies are starting to react, but the overall dividend rate amongst the mid-tier and major gold producers is absolutely abysmal, and it affects the markets, because people want, if you're going to play the big boys, you want, as a safe investment, you want some income out of those guys, and that happens through dividends, and it just it's not a good sector to be looking for dividends. Hopefully there will be enough investor pressure that will change. We've seen some indication of that. But my part of the market, the junior gold explorers and miners, I beat up on these guys all the time and say, when are you going to give me a dividend? And when are you going to quit trying to build a mid-tier gold company and return to shareholders? Some junior companies do that, but for the most part, that's outside their business model. Junior miners are usually run by mining engineers who are empire builders, and they want to build the next Agnico Eagle or Silver Wheaton or Goldcorp, and the shareholders sometimes take the brunt of that philosophy.
Yeah, but they're really missing out, because going back, and one of the ways to become an effective contrarian, I'm sure you'll agree, is just to go back and look at history. And when you go back to the early evolution of the stock market in the United States, and you had guys like Ben Graham analyzing shares in a way that had never been done before, the value of shares was based on their future discounted dividend flow. And you had that discounted dividend model for valuing stocks. And basically, if you owned debt, you made 5% a year. If you owned equities, you were going to make about 8% with the dividend and the appreciation. And now, from the tax system in the post-World War II era up until the Bush administration, when they put in the exemption. So anyway, getting back to the Ben Graham scenario, it was like, you had to pay a dividend. And yes, when you were in the early phases, you didn't. But a dividend policy, a sound dividend policy, can really drive up the value of your stock, especially in the U.S., where the dividends are 85% exempt now. And you see more and more people looking at these dividend stocks because this is what they have to do to gain income, because it's not there in the debt markets for them. I kind of long for the days when dividends become an essential part of the stock market and we're not just looking at capital gains. Now there's not a big difference,
Exactly.
One other thing I wanted to discuss with you was the Mercenary Geologist.Asia. Tell us about that real quick.
Well, my webmaster, who is a thinker, came up with an idea probably about a year ago that we needed to tap the Chinese market. And so on New Year's Day, we launched Mercenary Geologist.Asia, which is a scaled-down version of our website in simplified Chinese. We have found that there are lots of Chinese investors, and we all know that Chinese are moving willy-nilly into the resource markets, both as investors and through offtake contracts. Because of the number of Chinese investors, and also because of perhaps a more gambling nature than what we find in North America, we have decided that we're going to try to reach into the Chinese market, and we are doing that through Mercenary Geologist.Asia as our initial venture into this market.
Well, hey, I think that is a brilliant concept, and I'm looking forward to seeing that taking off, because I'm sure it will. And I'm sure, again, you're ahead of the pack, and a lot of people are going to follow you. So where do we find you again?
MercenaryGeologist.com, unless you prefer to read in simplified Chinese, and that would be mercenarygeologist.asia. So we intend through this to tap in not only to a market in eastern China, but also a bilingual market on the west coast of North America who perhaps prefer to read in simplified Chinese.
Well, brilliant concept. We wish you the best of luck. We'll see you again in a couple weeks in Vancouver. Be well and have a prosperous new year.
Well, thanks a lot, Kerry, and I look forward to talking to you about some ideas about these MLPs. That sounds fascinating.